Welcome to the podcast series, Small Business Survival Conversations. Through our weekly conversations, we hope to provide you with strategies and insights, knowledge and expertise to enlighten you as you work to build and grow your business. Here are your hosts, Anna Steinfest and Dr. Michael Troyer.
Hello, everyone, and welcome to our videos on the basics of starting and running a business. I'm with Anna Steinfest. Anna?
Hello, everyone.
Today, we're going to tackle a subject that's challenging for many people who perhaps are running a business, but they've never had the chance to gather any business background whatsoever. So we're really going to get basic in this. For those of you who have some sense of accounting and finance, we understand you may drop away because you already know these things. So we're trying to help those who don't have that background, and particularly we're focused on many rural business owners who don't have other people they can tap into to help gain this. We're going to start out quickly with an accounting outline. What do we need to know about accounting and why?
We were talking about why it is important to pay attention to accounting and finance, like Michael was indicating. It is important to know really what is your profit. How do you define even your unit? How much is the profit per unit? Because sometimes if you are selling several products, it is important to know which one is the most profitable instead of, focusing on that particular product or service.
Yeah, or if you're selling services, what that represents a unit that you can attach a cost to so that you know how to price it. So we're challenged here with pricing things and knowing what things cost. And we have to know that in order to judge whether we're making money or not.
Absolutely. I mean, the bottom line is, if you don't make money, you will not be in business any longer. So that's why in our next session, in fact, we will show you just actually how to read some of these financials. And we will, like Michael indicate, we will make sure that we explain this in a very simple and basic way. We know that you're not accountants. You will never be accountants. I mean, some of you may be accountants and they may be running accountant firms. So you're in a different level, but we're trying to help everyone else who is not an accountant, and you will never be accountant, but you still, as a business owner, have to read your financials.
And we're really doing this by asking you some questions this morning to lead into what we didn't want to present to you. So we started by saying, do you know how to define your unit of product or service? You need to. That's something you need to do. Do you understand what direct expenses are? As another question we can ask. Those are all the expenses that tie back to the specific product you're selling, that unit of product, or that unit of service, however you might choose to define it. Everything that must be spent in order to provide that to someone else, that's a direct expense. Now let's.
And how much cash do you have on hand to operate?
Yes.
Day to day. This is very important because you know what we will talk about in our next lecture, but there is a huge difference between my business is doing great and I don't have enough cash flow.
Yeah.
A lot of business owners will mingle these terms in their head, but we will try to explain to you why, like your income statement, or when your accountant is saying, hey, your company is doing great because your net profit is like plus this amount, but your cash flow is different than your net profit. So
let's give an example. Let's say we've got Sarah, and we're a window manufacturing firm, and Sarah helps to assemble the window parts that we've developed within our manufacturing plant. We have to account for Sarah's time on this particular window unit because she's a direct expense. However much time she spends on it is part of the cost of producing the window. Now, there's an indirect expense. Anna, in helping to run the firm, does a lot of marketing for us. She doesn't work specifically on this window, but no one will buy it if Anna isn't marketing that window. That's an indirect expense. It's harder for me to tie Anna's time directly to the window, so I have to divide it by how many windows I produce in a week. if she's marketing by the week, let's say, or in a month if she's markets by the month. So those are some of the challenging pieces of terminology we have to work on. And as Anna said, we need to know how much cash is coming in, how much cash is going out. And the fact that we've got some cash in the bank doesn't mean we're profitable. That's one of their challenges. So you need to know first, what's your average cash per month that you have in the bank or in your pocketbook that's tied to the business, and how much cash flows out at what points of time during the month. So if suddenly the bank account is empty, can you fill it again before the end of the month? Or is it going to be less than it was when the month started? Then you've got things to worry about.
So continue watching our training modules.
You've been listening to the Small Business Survival Conversation podcast. Make sure to like, rate, and review the show. And don't forget to join us next week for another episode. In the meantime, hook up with us on our Facebook group at Small Business Survival Tools and Tips. Till next time, thank you for listening.